Welcome back to Explain the Charts, where we decode the complexities of the financial markets to give you clear, actionable insights. Today, September 21st, 2025, our focus is squarely on XAUUSD, or gold, an asset that has truly been on a magnificent and captivating journey. The yellow metal has been making significant headlines, not just for its consistent performance, but for recently achieving fresh all-time highs above the $3,700 mark. Looking at the broader picture, gold has surged almost 10% in just the past month alone, building on an astounding 43% year-on-year gain from September 2024 levels. This powerful upward trajectory is largely fueled by a potent combination of macroeconomic factors and persistent geopolitical tensions. Specifically, the widespread market anticipation for continued Federal Reserve interest rate cuts is acting as a major tailwind for non-yielding assets like gold, significantly reducing the opportunity cost of holding them. As we examine the daily chart with all available candles, we can clearly see the impressive scale of this bullish momentum that has dominated the market for many months. This long-term perspective highlights a robust and sustained uptrend, indicating strong underlying demand and investor confidence. Gold's role as a traditional safe haven asset continues to shine during periods of global economic uncertainty and geopolitical instability, providing a reliable hedge against market volatility. Let's zoom in on the daily chart, focusing specifically on the robust bull run observed from mid-August through September 2025. Here, we can clearly identify a well-defined ascending channel within which gold has been consistently trading, demonstrating sustained buying pressure. A significant technical event was the decisive breakout above the $3,450 level, which has since been retested and firmly established as a crucial support zone, reinforcing buyer confidence. The Federal Reserve's recent action on September 17th, implementing its first borrowing cost reduction since December 2024, has been a pivotal moment, directly fueling gold's upward movement. This dovish shift, coupled with signals for additional rate cuts throughout the remainder of the year, underscores a commitment to monetary easing that fundamentally supports gold prices. While recent U.S. economic data presents a mixed bag, with a softening labor market that justifies rate cuts, alongside sticky inflation and a strong U.S. dollar that could temper gains, the net effect still favors gold. The retreat of the 10-year U.S. Treasury yield towards 4% also makes gold, as an inflation hedge, increasingly attractive to investors seeking to preserve capital. Compounding this, escalating geopolitical tensions, particularly the ongoing conflict in Ukraine and flare-ups in the Middle East like Israeli strikes in southern Lebanon, continue to provide invaluable safe haven support for gold. These global uncertainties divert capital into traditional safe havens, creating a solid floor beneath gold prices and insulating it from deeper pullbacks. Beyond speculative interest, institutional demand is surging. Global central banks are aggressively accumulating gold, with net additions exceeding 1,000 tons year-to-date and total reserves now surpassing $1.6 trillion. This sovereign demand, notably from Asia and the Middle East, is a powerful fundamental pillar, signaling long-term strategic confidence in gold and further buttressing its price stability. Moreover, gold ETFs have seen substantial inflows, recording $8.7 billion in the past month alone, reversing earlier outflows and indicating renewed robust long-term investor conviction. Now let's switch our view to the 1-hour chart, focusing on the price action from early September to get a clearer sense of midterm trends and recent volatility. Here, we can observe gold's price revisiting the $3,670 region as the week concludes, a key level following its earlier ascent to fresh all-time highs above $3,700. A notable technical event was gold's recent acceptance below its 200-hour simple moving average, a first since August 22, which initially signaled a potential, albeit temporary, bearish shift. However, the subsequent quick recovery and stall near the bullish flag pattern breakpoint at $3,628 advise caution and illustrate the underlying strength. Immediate resistance levels for XAUUSD are identified in the narrow band of $3,673 to $3,675. A decisive breakthrough above this resistance would likely propel gold towards the critical $3,700 psychological level, with follow-through buying potentially targeting the all-time peak of $3,707. On the downside, initial and crucial support is currently found at the $3,628 to $3,626 region, a level that previously acted as resistance and now serves as a weekly trough and strong support point. Should this level fail to hold, the next significant support lies at the $3,600 mark, which is a strong psychological and technical level that we expect to provide a robust base. Traders should monitor these levels closely, as a sustained move below $3,600 could indicate a deeper correction, potentially pushing prices towards $3,563 to $3,562. Conversely, consolidation above $3,628 could be a springboard for the next leg higher, signaling renewed bullish conviction in the medium term. The interplay between these technical levels and the broader fundamental drivers, such as US dollar strength or weakness influenced by economic data, dictates gold's hourly movements. To refine our perspective further, let's shift our attention to the 15-minute chart, examining the price action over the last 48 hours for immediate trading signals. On this shorter time frame, we observe a period of consolidation, with the price largely trading sideways within a familiar range, primarily between $3,660 and $3,685. This sideways movement is indicative of bullish momentum taking a brief pause after recent significant gains, as traders digest information and potential next moves. For intraday traders, this consolidation phase presents both opportunities and risks, requiring careful observation for breakout or breakdown patterns. A decisive push above $3,700, particularly if accompanied by an increase in trading volume on these 15-minute candles, would be a strong bullish trigger, signaling a high-conviction buying opportunity for new highs. Conversely, a failure to break above $3,700, marked by significant selling pressure and rejection candles, could lead to a healthy short-term pullback. In such a scenario, traders would look for the price to retreat towards the immediate support levels identified earlier, providing potential entry points for those looking to buy the dip within the broader uptrend. Volume analysis on this time frame is crucial. Sustained high volume during upward moves reinforces bullish strength, while high volume on downward moves during consolidation might signal a temporary weakening of buyer interest. Look for candlestick patterns such as engulfing patterns, hammers, or shooting stars around key support and resistance levels for confirmation of potential reversals or continuations. For instance, strong bullish engulfing patterns on dips would confirm renewed buying enthusiasm, while bearish patterns at resistance could warn of short-term corrections. Ultimately, disciplined risk management and waiting for clear confirmation of directional bias remain paramount when trading such volatile intraday movements. To summarize our in-depth analysis of XAUUSD, let's recap the crucial price levels and our unbiased predictions. Currently, gold is trading around the $3,670 region. Immediate resistance is clearly identified at $3,673 to $3,675, with a pivotal breakout point at the psychological $3,700 level. A sustained move above $3,700 could extend gains towards $3,750 and potentially $3,800 in the short to medium term. On the support side, immediate defense for gold sits at $3,628 to $3,626, a critical former resistance turn support. A stronger psychological and technical support is found at $3,600, which is expected to provide a firm base. Should a deeper correction occur, we would look to $3,563 to $3,562. with a robust foundational support area identified around $3,510 to $3,511, corresponding to earlier long-term channel dynamics. Our unbiased prediction indicates a high likelihood, approximately 70 to 75%, of XAUUSD continuing its upward trajectory and testing the $3,700 to $3,750 zone. This bullish outlook is powerfully reinforced by the Federal Reserve's dovish monetary policy, ongoing aggressive central bank purchases, and persistent global geopolitical safe haven demand. Conditions strengthening this prediction include further explicit dovish signals from Fed officials, sustained and significant inflows into gold ETFs, and any escalation of global tensions. However, there is a moderate likelihood, around 20 to 25%, of a near-term pullback towards the $3,600 to $3,628 support range. This could be triggered by an unexpected surge in U.S. dollar strength or if upcoming U.S. inflation data surprises on the hawkish side, prompting some profit-taking activity in gold. A more substantial, long-term bearish scenario, such as a decline back into the $2,500s as projected by some analysts, carries a low probability of about 5 to 10% in the current market environment. Such a significant reversal would only materialize under extreme conditions, including a complete and lasting resolution of all major geopolitical conflicts, an aggressive shift to a hawkish stance by the Fed, or a severe and widespread decline in global demand for gold, particularly from major consuming nations like China. Looking ahead, traders must keenly monitor several key upcoming catalysts: any new statements or policy nuances from the Federal Reserve, the release of crucial U.S. economic data, particularly inflation reports and labor market indicators, and, of course, any significant developments in global geopolitical hotspots. Always prioritize disciplined risk management, confirm your trading signals, and never trade more than you can afford to lose. That wraps up today's comprehensive market analysis on XAUUSD here on Explain the Charts. Don't forget to like, subscribe, and hit that notification bell to stay updated with our latest market insights.